Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream on both YouTube and also on Facebook as well. So, so today, as usual, a Monday evening. Okay, the market has just started at 9:30 p.m. Okay, so if you guys can hear me loud and clear, please say a hi to me in the comments. Okay. So on your chat, on your comments box there, please say a hi to me in your comments and chat box over there, just to make sure that everything is good, everything is well. Okay, let me take a look at the comments right now. Hello, Dave, Long, WM, Gilbert, Wailam. Okay, Manderuz, ZZ. Okay, from YouTube. Okay, Geraldine, Kelvin. Okay, Will, Edmund, Jason, Hadley. Okay, thank you so much. Okay, how's today's market? Not too bad, right? Ever since my live stream last week, okay, I feel that it is not too bad last week live stream. Okay, do you feel that it gives you a peace of mind that what is going to happen for the coming week, which is last week? Okay, right, last week Monday. After that, then 1 week has passed. Okay, if you feel that last week, okay, the Facebook live stream has benefited you, give you some peace of mind, okay, can you just type yes in the comments, or just type letter Y in the comments? Okay, Edmund, Melvin, Zach, okay, Bernard, David. Okay, thank you so much. Okay, so last week also, in the recent time, okay, quite a number of viewers that, of course, market crash, people are scared, and then combining both on YouTube and Facebook, there are more than 300 people, okay, at the peak, okay, simultaneously okay. After, of course, as people come and go, okay, but peak was about 300 okay. So market crash always like that okay. So I believe today the viewership will actually drop a bit because market not as scary as like last week. Okay, a lot of uncertainty, people are looking for some views on insights. Okay, anyway, by the way, last week my cough was pretty bad. This week, okay, getting a lot better but my throat still a bit itchy, and there's still some phlegm in my chest area. So sometimes I do have some cough. Okay, so excuse me if I do cough a little bit, especially if I keep talking, which I'm gonna keep talking right now. So there will be some cough. Okay, so let's kickstart this session right now. Hi, Christopher. Okay, all right. So let me just zoom in. Okay. All right. So as usual, a disclaimer first. Whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. What do Alan say? People need to listen to your voice to feel better when market crash. Market not crashing, lesser people will view okay, like I mentioned already. Okay, all right. So these are our socials. Okay, do follow on our socials over there. Yeah, the moment I start to speak, I start to cough it. All right, so I'll post the link in the comments. So the Facebook, Telegram, YouTube, TikTok, X, everything is there. Webinar homepage is there. Okay, and yeah, so like I mentioned, Telegram, typically every morning I will send you the the morning wrap. So what has happened? Okay, so especially some of the updates, price movers. So do subscribe to our Telegram channel as well. Okay, so last but not least, before I continue the insights, right? Okay, the Market Insights Conference, okay, it is coming up in about 2 weeks time. Okay, just about 2 weeks time. So 26th of April. Okay, the 2 weeks later. Okay, 26th of April, Saturday, 10 a.m. to 3 p.m. Okay, do register for for this event. So I'll post the link in the comments over there. So once again, of course, the market, it is very volatile. Need some insights. Just nice this timing. I'm suddenly talking very bad again. Okay, so the insights are just nice. So Shay, humble trader. Last week I said already. I think quite a number of you guys know her. So she's the humble trader from YouTube with more than 1.3 million YouTube subscribers over there. Okay, so Shay, with 1.3 YouTube subscribers. She'll be here, okay? You're going to fly all the way from Canada, Vancouver, to speak to you guys, okay? And then there'll be Alvin, Caden, and David, okay? From StoneX, okay? By the way, okay, City Index is now known as forex.com already. So if you actually, for those who know about City Index, if you go to the City Index site, it'll be diverted you to the forex.com site. So once again, there will be a free goodie bag for the first 200 attendees, okay? A bag. Now this big tumbler are very popular, okay? And then this is a very big mouse pad, okay, that you can put on your desktop. So it stretches the whole table. So this is a chart pattern, you know, some of the candlestick pattern as well. It's pretty useful in a way, okay? I mean that, you know, personally, I still use a mouse pad. I'm a millennial. I still use a mouse. So this will be quite useful for me as well, okay? So all I have to do is just register this link over there. Okay, I'll post the link once again. So we are left with not many seats left. I believe, you know, market crash, people are scared, that kind of thing, want to know what are all these experts, their views, their insights, their market outlook and such. So we do have many seats left, even though we are still 2 weeks away. So do register if you haven't done so, okay? And yeah, let's kickstart this session right now. If you follow my Telegram channel, right? So in fact, today I posted also on the MarketWise Facebook page. Okay, I posted the CEO of Amazon actually wrote a letter to shareholders. So if you actually go to this link, this is a summary. Okay, I'll post the link in the comments. You can just take a look. So I actually summarized the shareholder letter. So you can actually read the original letter here. Okay, you can go here. You can read it. Actually, it is pretty long. Okay, a lot of things to digest. So if you do not have the time, you want a more concise version, visually more appealing to read, okay, you can go to this summary that I have done. If you want to go to the original, you can also click on the original as well. Okay, of course, this is our social media channel. Okay, these are the things that, you know, I summarize for you in a very concise way so that you get the gist of this shareholder letter, and talk about AI and all these meetings, you know, what are the products they're developing, okay, and how are they doing, okay, like for example, the AI, what are they doing as such, okay. So if you think that this is something that you want to read of usefulness, do you want to read, okay, you can just head over here. Okay, I'll post the link in the comments. You can take a look, take a view. So it is totally free for you as well. Okay, all right. So for economic data for this coming week, right? Okay, this week is the April the 14th. Okay, there are some news over there. Okay, so today and tomorrow, Tuesday, there isn't any so-called news coming out, okay, economic data coming out. Starting on Wednesday, core retail sales, okay, and then on Thursday, Jerome Powell is going to speak again. I'm not sure what's going to speak about, okay, but all this could be market moving. And then 8:30, there's the unemployment claim, so something that you want to take note, okay. All right, and of course, you know, this coming Thursday, not Thursday, Friday is actually Good Friday. So the market, it is actually closed on this coming Friday, which happens, okay, to be OPEC options expiration day on this coming Friday, the 3rd Friday of the month, okay. So this coming OPEC, right, will be this coming Thursday. So OPEC option expiry will be this coming Thursday instead. Okay, so if you want to check out the calendar which I've shared since the start of the year, especially for those who just joined, okay, you can head over to the link where you'll be given this OPEC calendar. Okay, so can given this OPEC calendar, okay, you can zoom in, you can see that, okay, by right, okay, 18 is the OPEC, but because it is a Good Friday, so the OPEC becomes 17, which is a Thursday. Okay, so these are the so-called the economic data so far. Okay, so all in all, everything okay? If everything okay, just type okay in the comments before I continue my main gist of the live stream. So I'll go through some background, what's happening since the past week, okay, the macro outlook and such before I dive into the chart again, the technical aspect. Okay, so I think last week, like I mentioned, okay, some of you guys, especially as I mentioned, quite a number of you guys, a lot actually view the live stream. So I hope that I've calmed you down. Okay, it is not as scary as what the media has told you. Okay, in fact, I watched some of these news. Okay, on channel 8. In fact, today also I happened to come back home. So I watched channel 8 news. Okay, so there were two analysts, okay, talking about the market and such. Okay, if you are actually not well versed with the market, you will still feel a little bit scared. You feel still a little bit uncertain. Okay, because people typically, okay, typical that people talk about the Trump tariff uncertainty, volatility, and such. So you won't be able to know whether the market it is at a low level or it will continue selling now. So all these analysts, okay, or political commentator, it is just commenting on what's happening right now, and typically they don't look at the chart so intensively like we do, the technical people guys do lah. So yeah, so it doesn't really help. Okay, yeah, this is just some rumbling from me lah. Okay, anyway, so I start from the macro side of things first. So what has happened since then? Okay, so the S&P okay hasn't dropped into a bear market yet. Okay, by definition, okay, rule of thumb, okay, index has gone into a bear market when it dropped more than 20%. Okay, 20%, but the S&P did not really drop below 20%. So if you take a look at the SPX cash index, okay, so if you look at the lowest point where it closed, okay, so the peak was here. Okay, yep, the February 19, like quite some time ago, right? All right, that was the peak. Okay, February until now was quite some time ago already. So from the peak, okay, until to the closing price, okay, like the latest, okay, it did not drop, okay, more than 20%, even though intraday, okay, it dropped more than 20%, okay, like 21%, but towards the end of the day, it actually recovered. So this was the bar that I am mentioning. Okay, this is the bar, this green bar there. You can see intraday it dropped to a low, but after that it recovered. So it did not really close below the 20% mark lah. Okay, all right. And recently, okay, the historic rally, the index rebounded with third largest gain, okay, since World War II. So this is something to be typically such thing, okay, you will see like every like 50 years, that kind of thing now. Okay, but nowadays recently, okay, like since COVID, it has been happening quite recently. Okay, okay, so if you take the S&P, okay, third largest gain since World War II, you can see that this very big bar, third largest gain since World War II. So for the S&P, it was up 9.5%. This bar was up 9.5%. If you take a look at the Nasdaq 100, okay, this bar was up, okay, 12%. It was very, impulsive, very big, huge green day. It won't usually see this kind of volatility, and of course a big rally, just in case you don't know. Okay, and of course what happened, of course the latest news recently, not recently as in since 1 or 2 days ago, okay, it's about the semicon or tariff on off, this kind of thing. But okay, just to give you a brief update for those who are not in the know. All right, the update, okay, White House announced a 90-day pause, okay, for those non-retaliating country. Okay, so the rate lowered to 10% except China, because China retaliate. Okay, it is telling China is telling US like, okay, I'm going to fuck you. I don't care what you're going to do. Okay, you tit for tat, you increase the tariff. Okay, I'm going to increase as well. Even though Trump say, okay, do not retaliate, they are still retaliating. So in fact, China actually in fact give them the middle finger. Okay, I'm going to retaliate. Okay. All right. So China exception. So the China side, okay, tariff on Chinese goods raised to 145%. Okay. Of course, like I mentioned, right, China retaliated, okay, increased tariff on the US import to 125. So tit for tat, okay, like, you know, like two siblings, okay, quarreling each other, you know, you're not happy, okay, I fight you, not happy, okay, I don't friend you, I fight you again, this kind of thing, okay. All right, so this tariff time offer, okay, except China, okay, 90-day pause, okay, it does not remove the uncertainty, but you open doors for negotiation and de-escalation. But I believe, okay, this tariff thing, it is kind of, you know, sharp wolf, okay. It's like Trump, okay, every single day, every or alternate day, you say, oh, there's tariff, there's no tariff, there's tariff, there's no tariff. So I personally, I think that the market is kind of more already, okay. It's kind of starting to get immune, okay, immune from this tariff, okay, thing. Do you agree with me or not? If you agree with me, okay, type A in the comments. So if the market is starting to get immune, okay, to all these things, tariff thing, okay, so in other words, okay, the market will start to react lesser and lesser every time Trump speak on tariff. Okay, I'm not sure whether you agree. If you agree, okay, just type letter A. Ian Tan said, China overacting should not retaliate over the small matter. Okay, all right. Actually, it is not a small matter. If my personal opinion, I could be wrong. Okay, if they really impose the tariff, okay, to the rest of the other country and such, okay, but the question is, okay, China doesn't care. Okay, China doesn't care. Okay, they short form, okay, they don't care. Okay, because China is self-sufficient. Okay, all right, they can produce anything they want in the country. They have their own consumer and such. Okay, so you want to impose tariff, okay, they don't care lah. Okay, I just tit for tat, retaliate law. Okay, it is actually the US, okay, that is depending on the Chinese, okay, for a lot of products. Like, for example, semicon, with like for the past 2 days, they say that, you know, is exempted from all the tariff and such, even though after that, Trump reverse U-turn the policy that, you know, the tariff will be in place. After a 30 days kind of a pause, then they'll reimpose the tariff again. So the US actually is dependent on Chinese for a lot of products, a lot of the manufacturing, a lot of these rare earth things, a lot of metals, okay? Of course, even though some of these metals is not on this tariff thing, but overall, all in all, I believe that, you know, China and US, okay, the US need more on China than China need US. Again, I'm not sure whether you agree with me. Okay, this is just my personal opinion. Okay. So see the chart. So this is the third largest pullback over the past 6 years. Okay, let me just like I mentioned, right? Typically, it is like every 10 years, 20 years, then you'll see this kind of very huge movement. But you can see that this is a bit unusual over here. Okay, so even though it didn't really go into a bear market, okay, but you can see that for the past 5 years, okay, it has undergone a like bear market, okay, open quote unquote, okay, like bear market in 2020, okay, and then in 2022, this bear market. This is because due to the inflation, the Fed hiking the interest rate that caused this bear market, okay. But this so-called correction or bear market, you can call it is artificially induced, not AI, okay, not artificial intelligence, but artificially induced because of the policy, okay, the tariff. So within 5 years, we have like 3 bear market, which is typically you only see a bear market like every 5 years, but within 5 years, we have seen a bear market already. Okay, so just go through very quickly. Retaliation, okay, China, Europe hike tariff, while the rest of the smaller countries, okay, they don't dare to retaliate also lah. Japan, South Korea, Vietnam, they chose to discuss and have a chat with Trump. Okay, so these are the market impact. Okay, So the S&P fell 12%. Okay, yeah, these are the things that is what caused the U-turn in the policy and caused the equities market to hit higher. In fact, last Thursday and Friday, this is in fact the bonds market. I'm not sure whether you know. Okay, the bonds market, it is actually the bedrock of the US economy. Okay, everything else can fail. Okay, everything else can fail, but the bonds market, okay, cannot fail. It cannot fail. Okay, so you can see that, you know, last Thursday, Friday, starting of the week, the bonds market actually dropped quite intensely. Okay, all right, which means that the 10-year yield, okay, actually spiked up very, very fast. Okay, by right, okay, when the market is undergoing a bear market, a correction, okay, and especially, okay, when people are anticipating, okay, that the interest rate will come down, okay, the yield, okay, should come down as well. Okay, plus people are also rushing into the bonds market and such, especially in the bear market. Okay, it should come down, but instead, okay, the bonds yield spike up very, very fast. So something it is actually broken. Something is actually broken. Okay, so that caused the Trump, okay, to reverse the policy that causes to have a pause in 90 days. So if you actually look at the interview and such, talk about the bonds market. Was that my cough getting worse because of the talking? That caused the bonds market. Like he talked about the bonds market as well in an interview. Okay, I don't have the video right now, but he also talked about bonds market. That's why he caused talk about the pause in the tariff and such. So this is broken, so it ought to be fixed. So as of now, okay, has stabilized right now. It didn't really continue to hike. Okay, yeah, you clear what I'm trying to say. Okay, everything else can fail, but not the bonds market. The bonds market cannot fail, and if the bonds market fail, okay, starting to fail or something is not right, the Fed, okay, will come in and intervene in the bonds market and provide the liquidity, whatever they need to do that. Okay, all right. So you understand that? Can you type letter B in the comments? Okay. All right. So Tarun say the actual cost, okay, wasn't really given. Okay, there were some rumors that because of the arbitrage that the hedge fund are doing, okay, between the futures and the cash market, futures bonds, okay, and they are deleveraging, okay, they need to some margin call and such, they need to sell off these bonds. That is the reason why the so-called the bonds market starting to come down really fast. Okay, and of course, they also rumor that, you know, China, Japan, they are selling their their US debts as well. That cost, but the actual reason wasn't really, you know, announced yet by the Fed and such. But clearly something was broken and something like need to be fixed. Okay, I'm not sure whether the Fed has already come in and fixed it, but no, right now has been stabilized. Okay, okay. Okay, so softening stance, okay. US back off, delaying tariff, okay, to reduce the economies. This economic risk, okay, it is actually based on the bonds, all right. So, but the uncertainty still remains, okay. As I mentioned, Trump, okay, suka, okay, every alternate day, he can come with a policy, okay, so negotiation will be slow and noisy. Volatility is likely to persist and mix headline, but like I mentioned, okay, as he keep talking about this tariff thing, okay, the market will get used to it. So it won't have such like an impact like it used to be like last week. Okay. Is it because buying long-term bonds due to fear in bonds rising? By right, okay, if people are fearful, okay, buying bonds as a safe haven, okay, the treasury bonds, okay, should continue to go higher. Like previously, it actually went higher because people are flocking to the bonds, okay. People demand for bonds, supply and demand 101. People demand more prices go up. But you know, this is inverse. It was broken. Okay. All right. So yeah. So let's say if this Trump tariff, Trump tariff persists, okay, you know, he still continue the tariff and such, there will be slower growth expected, okay. So, like if the tariff stick, right, based on the Fed 2018 model project a 2.4% hit on the GDP. So they're expecting, okay, forecasting that the so-called GDP will be hit, okay. So there could be recession, okay, in the future, even though there isn't really very obvious recession risk that's coming up right now. Just that early sign, there will be slower hiring, weaker consumer spending. But right now, the economy, okay, it is still okay. Like I mentioned, okay, this was artificially induced AI, okay. Prior to that, you know, the consumer spending is okay, labor force is still okay, unemployment rate, everything is still okay. Okay, so like I mentioned, starting point, everything is okay. Okay, corporate balance sheet, which means the corporate earnings, okay, they are still making record earnings as well for a lot of companies. Labor market is still strong. Okay, so there's no major excesses like over like valuation like in 2008, where there's also a lot of speculation. Okay, like or like, you know, leveraging like the the great financial crisis is the because of the bad mortgage loans, right, and everything, right? Okay, yeah. So the policy could pivot. Okay, so right now, any point in time, okay, Trump, everything could, like I mentioned, U-turn the policy and the market will go up. Okay, so it really depending on what Trump it is moving forward lah. But like I say, okay, as he mentioned about the so-called tariff thing, the market will get used to it lah. So if the economy is still intact, there's still growth, company is still growing profit and such, okay, I think should be generally okay. Even though, okay, the market might still have volatility, but we should not see like really a bear market where there is like crash more than 20%. That kind of thing. Okay, all right. So like the Fed policy support I mentioned, right? Okay, unlike 2022, which is because of the inflation thing, right? Okay, the Fed is in a rate cutting mode. Okay, all right. But right now, okay, CPI it is actually dropping as well, which is good. Okay, so by right, okay, if the bonds market it is not broken, okay, the Fed won't take any action now. Okay, so far it's still okay. Okay, all right. And do you remember? Last week, I talked to you about the VIX index, the volatility, okay? It surged more than 3, okay, standard deviation. Okay, so historically, the S&P intraday move the VIX, move about 1% VIX, okay? But no, I mean that the intraday movement for S&P less than 1%, okay? But since the tariff new average about 5-6%, in a day. So which means that up, down 5-6%, that kind of thing. Okay. And as I mentioned, right, the VIX hit a crisis level, surge to the highest level since the 2020 pandemic. Okay. Such high level only occurs 8 times. Okay. Only 8 times in 35 years. Okay. So on the 8th of April, the VIX actually peaked at 52. Okay. Historically, it takes about 8 months for the VIX to normalize. To normalize meaning back to the mean. Okay, back to the mean that is about 19 to 20 level. Okay, remember or not? Okay, yeah. So okay, I'll show you the chart later lah. So I'm just to share with you what's on my screen right now. Okay, so like I mentioned last week also, if the VIX typically hit such high level, okay, moving forward, like 3 months, 6 months, 1 year moving forward, okay, the equity returns tend to be pretty strong, okay, not because that, you know, volatility is good, but because the pessimism is often priced in at extreme. People are very pessimistic, very scared, okay, a lot of people are selling, okay, so when a lot of people have already sold, okay, capitulation, okay, the people who want to sell have already sold, then there's no more people to sell to, and gradually, okay, the market will start to recover. Okay, like even though, okay, I mentioned about capitulation last week, capitulation, okay, it doesn't mean that, you know, that would be the absolute low, but it could be still drop a little bit lower, but it is almost there for the capitulation. Okay, so I will show you the chart. Okay, not from my chart but from other sources over here. Okay, so you can see over there, this was the VIX, exactly like what I show you in my trading view chart. Okay, all right, open in a new tab over there. Okay, so extreme volatility has been followed by strong return. Okay, so you can see that most of the time, okay, 12-month return, okay, like since pandemic, okay, 2011, also a double-digit gain, and in fact, since 2010 also. The only time it really failed was during the global financial crisis in 2008 and also the dot-com crisis, okay? So this was the 3 standard deviation where the VIX actually hit, okay, intraday high of about 52 level, okay? So this was the VIX that I have shown you guys last week, right? So I do a line chart, naked chart over there. Okay, so you can see that since 2020, okay, this was an exceptional case which I mentioned last week. Okay, hit about 80 intraday, but this was the highest since 2020. Okay, in fact, okay, not very often that the market will hit the price, the VIX will hit more than 3 standard deviation. So again, like I say, okay, jokingly say quote inverted, okay, when it hit 3SD, okay, you can close eyes and buy, that kind of thing. Okay, more of a investing perspective. Okay, investing perspective, not on a short-term trading, buy and hold. Okay, that kind of thing. Okay, all right. So you can see that if you go down back, okay, not many cases. Okay, only the after the 2020, you have to go back to 2012 already. Another 10 years, 12 years ago. Okay, to hit that third standard deviation. Okay, and after that, okay, yeah, of course, it's the 2008 financial crisis. So 3DSD, it is not that common. You need a lot of so-called fear volatility that allows you to hit more than 3SD. All right, so you understand why I mentioned about this VIX. Okay, if you understand, just type VIX in the comments. So I mentioned, okay, for return, it is generally okay. So once again, okay, there was some analysts saying, okay, no quick rebound is expected. V-shaped recovery is unlikely. Do you remember last week when I asked you guys, right, okay, how many of you think that the market is having a dead cat bounce or a real recovery? Okay, I think about more than 60 to 70%, okay, think that it is going to be a dead cat bounce. Okay, again, we won't know because right now the market is still recovering right now. We won't know whether there will be another sell off or not until that happens. Okay, but around 60 to 70% mentioned that. So we shall see how it goes later. I will go to the chart, okay, and share with you my views. Okay, all right. Right now, okay, market pullback has made valuation more attractive. Okay, so the market valuation, okay, in terms of the P ratio, it is not as high as previously before. So the indices are now trading at or below their 10-year average. Okay, so not valuation not that high. So it's at their 10-year low. I'll show you this chart, then you'll understand what I'm trying to say on this. Okay, so let me show you the chart. Okay, so prior to that, okay, the valuation was higher. Okay, Nasdaq, it is still high. Okay, but the S&P, it has brought down lower. So the 10-year average, this is the ratio, P ratio, is about 18. It's about 18. Okay, so right now it's 18.2. So just about average. Okay, equal weight is also average right now. For the mid cap, it is below valuation. Small cap, it is also below the valuation right now. So all in all, right now the sorry, this is Nasdaq. I've forgotten about this red bar over there. So it's also below the valuation right now. So all in all, the market, it is actually not expensive right now. Not expensive right now based on the valuation. Okay, you can see this is the premium to discount. So in fact, the market is having a discount right now, okay, based on the forward price to earnings ratio. Okay, not expensive. Market is at a low. Okay, and there is a 3 standard deviation thing. Okay, all right, clear. So okay, this is the so-called the macros, the background that I'm talking to you about the tariff and what the market has been doing right now. So if you think this is of value to you, okay, if you learn something new, you think this is of value, you type letter V first, and also give me some like and share lah, okay? While I take a short break, a short rest right now, okay? All right, give me a like or share. So far, indeed, today, the number of viewership has dropped, okay? Back to average, slightly above average, okay? Right now, they have 160 combined on YouTube and Facebook as well, but lesser than last week. Last week was more than 300 plus, okay? Give me some like and share now, okay? If I don't get more than 30, okay, I'm not going to continue my views. So give me some like and share. If you find this useful, do share our MarketWise Asia live stream to your friends, relatives as well. Okay, or you can also join our Telegram channel. Okay, and you actually share this out also. And by the way, okay, for those who just joined, okay, like I mentioned, okay, the Amazon shareholder letter. Andy Jensen actually wrote a letter for the shareholder, so you can click on here, okay, which is actually this one, okay. So if you go to the original letter, it is actually quite long now, okay. So I did a summary for you guys, all right. So easy to digest, better visual to follow. So you can head over to the link here and check it out. So this is totally free also. So yeah, so also can share it with your friends if you find it useful. Okay, so let me just post the link in the comments as well. So two more before we hit 30, 2 more likes. So for those who haven't liked, please give me a like, else I will just not continue. All right, let me take a break first. Yeah, so for those who haven't joined the Market Insight Conference, we don't have many seats left. So so do register now, because as I mentioned, just in time at Suntec City face to face, okay, you need to be residing in Singapore. So Shay from Humble Trader, last week I mentioned a lot of people know her. So she will fly all the way from Canada, Vancouver to speak to you guys about the market, you know, the rest of the speakers about the market outlook, okay, the insights, okay, and the analysis of the current situation right now, okay. So once again, if you want to, okay, just register over there. Limited seats, really limited seats, because it's a face-to-face event, and of course, the first 200 people attendee will receive a goodie bag, okay. All right, so thank you so much. I have more than 30 likes right now. Okay, so let me just share with you my views. Let's go back to the chart right now. Okay, so last week, okay, what did I mention about the S&P 500? Do you guys remember about my star reversal, potential star reversal signal over here? Okay, last week I talked about the potential star reversal signal somewhere around here. Oops, wow, so big. Don't need to be so big lah. Okay, remember or not? If you remember, okay, just type yes in the comment. So previously I mentioned that, okay, these were the past star reversal signal, okay. It doesn't guarantee you that, okay. I was looking at David Gunn's comment. I'll go through later. So remember or not, if you remember, just type yes in the comments over there, okay. It doesn't guarantee you that it's going to go higher, but see that potentially there's a star reversal signal, and then coincidentally, okay, Trump just announced the pause in tariff because the bonds market, it is broken and the market start to rebound. Okay, all right. You think it is safe to enter the market? Open secret that Trump and his kaki are manipulating the market and will sell shorts when the market is announced. Okay, no need to think so much ahead, okay. When it is low, I think we should buy when there's fear in the market. Last week, okay, I think my stand is pretty clear already, okay. VIX hit at a low level, that kind of thing, okay. Yeah. And okay, regarding your question, what makes you think that, okay, yes, some people are saying that, they are manipulating the market, his friends and all this are massively profiting from all this, okay. What makes you think that they will sell off right here, okay? What if they really want the market to go higher and such? So we won't know what is their khakis they are doing, when is their exit level and such, okay? They may be short-term take profit, or they may have some grand plan to push up the market. These are the things we cannot control. You remember what you understand what I'm trying to say, okay? So these are the things we cannot control. But the things we can control, okay, is when we are going to buy, okay? Last week, you showed the 200. I said that almost hitting there, almost there, okay? And I repeatedly say that, okay, no two markets are the same, okay? Almost there, almost there. So we are close to that already, okay? Close to that already. So you cannot wait for the, extreme low. So the market doesn't have to, I must say, doesn't have to, okay? That's why I'm very afraid. That's why I'm very afraid. I'm very scared that people will put things into my mouth. Okay. So last week I already said almost there. Sometimes the price might not be there. So we have to see what the market is doing, plus the other market internals. Like for example, the VIX ratio are showing you. Okay. Like for example, last week I showed you also that, like the VIX ratio over there, okay, it is somewhere near the bottom also. Again, okay, it does not necessarily mean that the market is going to go higher. Okay, we won't know, but there are certain signs that the market is seriously oversold and there was some fear, okay. Again, whether you want to buy or sell, it is entirely up to you. So I cannot explicitly tell you to buy or sell because I'm not a licensed, reminder or what. I don't have a license, okay? So I should not tell you what to buy or what to sell. So you have to make your own decision now, okay? So you have to infer from all the things that I have mentioned to you, okay? So, okay, let's go back to the DP gallery. So what is happening right now in the market, okay? So last time I mentioned about the percentage of stocks above the 200 days moving average. Okay, so this was what I mentioned last week. Okay, all right. Okay, so this was what I mentioned last week. So if you actually can zoom in back to the maybe 15 years, okay, so that was what I showed. 15 years, okay. So I mentioned that, okay, it was somewhere near the low, like, it in fact break below the low, not the absolute low, but somewhere there. And we actually hit, okay, the 20% mark. When I first mentioned, right, I think it did not hit the 20, did not hit below 20 or so, if I'm not mistaken, but it has gone below the 20% mark. So it was almost there, okay, not right at the lowest. But as I mentioned, right, we cannot expect same crash to be exactly like the same, okay, and go to lower, hit the absolute low, okay. So almost that is actually good enough, okay, plus the other market internals, okay. So he'll be gone in 4 years. That is perfectly true. I really agree with that. So after 4 years, okay, Trump will be gone. This such thing might not be around anymore. If the earnings continue to be good and such, okay, the market can continue to go high. We won't know, okay, but we have to take a longer term approach, which I agree with Tarun and Adrian saying that the worst is not here yet. We'll have another big correction possible, okay, possible. So again, I have no idea what the market it is going to do, okay, like I mentioned last week, okay. There are some guru who tell you that, the market is going to do this, going to do that. It's my whole pile. After it went down, they say, see, I told you that the market is going to do this and do that. But to be very honest, I don't know. So like what you said, the worst is not here. It could be, okay. So I won't be disagreeing with you because the market can do anything, okay. So let me just go to the chart right now. So if you add in the usual things over there, okay, the central pivot range over there, okay, All right, so let's say if the market is going to rebound, and if we add in the yearly central pivot range also, okay, so the key things that you need to watch out for is when the cash index, okay, it is hitting the pivot point level, yearly pivot point, okay. To simplify for you, the actual number, it is 5554, okay, but you know, to make things simple, okay, just 5555. Cash index 5555, okay. This will be the yearly pivot. So if the market can continue to really go higher, then this will be the resistance level you need to watch out for. And of course, this is going to be a zone. You can see that these monthly, okay, I remove the yearly, okay, you can see that the yearly has gone. This is the monthly. This is the monthly CPR. It is going to be acting as a resistance level. So you can see over here, prior to that, okay, the market acting as a resistance level. Go down, resistance level. So if the market continue to go higher, this will potentially be a resistance level as well. So, you know, Shara is asking which indicator is this colored one. This is the Ichimoku cloud. Okay, this is a standard technical indicator from TradingView and a lot of so-called charting platform as well. So this central pivot range, okay, you can actually, you know, go to YouTube, okay, you search for market-wise Asia, okay, you search for cloud market-wise Asia, okay, just to give you an idea. All right, over there, so you can see over there the updated one, the how to set up the Ichimoku cloud, the pivot point and the central pivot range. So all in all, you can see here, okay, so you can know how to do that. All right, so adding in the yearly, so this will be acting as a very key resistance area over there already. So if price continue to go higher, okay, like what Adrian said, okay, the worst is not here yet. So possible. So if price really does reach this level, okay, there could be some selling. So again, there could be some selling over here. Okay, there could be some selling. Okay, whether it will break below the low again, we won't know. Okay, indeed, there could be some selling. So we won't know until price hit that level yet. And I believe, okay, you know, when the times come, okay, there will be some certain news in the market, okay, to justify why the market is selling again. So actually take a look at the S&P futures, okay, we are also somewhere around the this level. So this is the futures level. So there could be potential some selling. This is the Nasdaq. We are also hitting right smack into the lower range of the CPR, the yearly and the monthly as well. So the market, okay, might continue to head higher, heading into the OPEC week, okay, OPEC, which is this week. And historically, okay, this April OPEC week, I think Tuesday, Wednesday, Thursday, historically is actually quite bullish for the market. Of course, this is based on historical data, so we won't know. Maybe tomorrow Trump say this, the day after Xi Jinping say another thing, the market might sell again. But if there's no more so-called further news on, you know, jaw-dropping news from Trump and such, okay, historically, okay, the April OPEC week is actually pretty bullish. So, okay, so there are a few scenarios that you need to get prepared, okay, like what Adrian said, there could be sell-off. I don't agree. I don't disagree with you. So, okay, all right, possible so-called direction, the market might retest the low again, okay, and rebound higher, okay, or all right, the market here go down a little bit higher, go down a little bit lower, okay, did not make a lower low, okay, and then continue to head higher, or the market just range for a while until maybe May or June or until July, that kind of thing. So there are a few scenarios that you need to get prepared lah, okay. But personally, okay, personally, okay, this is my opinion. I don't think that the market, okay, will go down lower than this low over here. Okay, this is the swing low. So, okay, this is my personal view. Again, I could be wrong. Okay, so please don't quote me, say that Alex say that, you know, he think that the market is not going down, that kind of thing. I did not say that, okay. It is just my personal view. I could be wrong. But if the market really hit the CPR and continue to go down and hit this swing low again to form a double bottom, okay, that is possible. Okay, this is possible, and then before the market rebounded higher. So this is possible. So this scenario, it is possible. But the scenario that I said, okay, that go down, okay, ping pong, and then go down lower to become a major market crash, I don't think so lah. Okay, this is of course based on the market internals, the market breadth, and all this lah. Okay, all right. So I won't know for now. But if the times really comes, okay, and hit the low there, then we take one day at a time to see the market breadth, the market internals, and see whether, you know, there will be further development now. Okay, for now, this will be the few levels that you need to be aware of. Now, we are going to hit the resistance level pretty soon, at least for the, you know, S&P. Okay, this is the so-called the 5555. Okay, in the cash index, cash, spot index, cash index. Okay, can you just type 5555 in the comments? This will be a level that you need to be more careful. So if you are doing, okay, if you're doing short-term trading, like a few days, that kind of thing, okay, when price hit this level, you know, you can consider taking profit and such. But for those, like last week, when I first mentioned about, you know, investing, having a longer term kind of view, all right, we won't know whether the market, this will be going to be the absolute low, okay, or like Adrian said, he think that the worst is yet to come, yet there could be another low, so we won't know. So hit about 20% mark, okay, you can divide into a few tranches, okay, drop 20%, okay, you so-called invest first tranche, drop 30%, okay, you invest more, drop 50%, if the market really drops somehow, okay, you know, drop 50%, your third tranche, okay. So again, the percentage doesn't have to be very precise, okay, it can be 20, 30, 40, 50%, up to you, or doesn't necessary to have 3 tranches. You can have 2 tranches, you can have 5 tranches, 4 tranches. It is entirely up to you, okay. But like I mentioned, personally wise, okay, if you think that you're going to do swing trading, for me, okay, I'm not actively doing swing trading right now because, you know, the market is still volatile. So if even you set your stop loss with a wider stop loss, you still can get stop out pretty easily. Okay, yeah. So for me, I have invested some interest in the index lah. Okay, all right. Okay, for a longer term positioning now. Okay, all right. Any other questions so far? Just now, today about 1 hour mark. Okay, so this is my view about the market. Okay, I think the market might have some so-called a few more days of legs to go higher. Okay, or maybe 1 day or 2 days. I don't know lah. Okay, depending on how volatile the market is. But if the cash index, you know, hit 5555, then you need to be a little bit more careful. It also coincides with the prior so-called prior support level over there lah. Okay. All right. So this is overall my views. Okay. So once again, hey, if you have questions, you can answer or type in the chat below. If you find value, okay, in today's live stream, once again, do give me some support. Type letter V in the comments, or give me some like or share. So right now we have about 36 likes on the Facebook. Okay, if you're watching this on YouTube, do subscribe to our channel, like, follow our YouTube channel as well. Okay, so I think the key thing for this week is that, okay, the tariff things will still continue, okay, but I think the impact will get lesser and lesser. Yeah, okay. Before I forget, okay, this tariff thing, okay, is a little bit like, okay, yeah, before I go end the session, it's a little bit like the 2011, the Euro debt crisis. how many of you actually remember the euro debt crisis? How many of you actually remember the euro debt crisis 2011? This part over here, okay? At that point in time, okay, I'm not sure whether you can remember. The news were actually very scary, okay? It is like, wow, the Europe country are all failing, okay? They are going bankrupt, okay? The PIIG countries are like Portugal, Italy, Greece, some of the countries I also forget well, okay? They are going bankrupt, okay? It's like, wow, countries go bankrupt, that kind of thing there. So it's like very scary. So wow, 没得救了 kind of thing. So it's like, wow, you're going to affect the market a lot, that kind of thing, okay? Like well, every day there's this kind of news. I remember very clearly because that was the year I entered into the market. First year I entered the market, then the market have this euro debt crisis. Okay. Yeah. So in fact, I also panicked, sold my stocks, which I shouldn't have done so. Okay. And at that point in time, okay, there was a Taiwanese guru. I don't know how many of you can remember. His name is called Hu Yang. Okay. He actually came to Singapore and gave a talk about the market outlook and happened to be the euro debt crisis. So I remember very clearly, okay, he was very at peace. Okay, say that 哎呀，这个不重要啦，不是 not really say 不重要啦，现在不是大事。Okay, he said that it's like not something that's very important. Okay, it is like a mosquito. Mosquito. Okay, keep buzzing you. Okay, it's like keep buzzing you. Okay, every time bite you. Every day bite you here, left, right, bite you. You have a lot of red marks over your body. Okay, but you won't die. You won't die. 你不会死。Okay， 蚊子是一直每天在那边一直在那边叫。Okay, but you won't die. Okay, so it is almost that eventually it will pass. So it is the same like this thing also. Okay, the market. Okay, having a lot of volatility, over there, okay, because of the tariff thing. Okay, every day got tariffs scare you and such, buzzing you, mosquito bite you here and there, okay, but you won't die, okay, you won't die, okay, eventually it will pass, that kind of thing. So the news will get used to it. Yeah, I wonder where he is now. Yes, that's right. Okay, I wonder where he is now also because it has been a number of years. I've never heard of him already. Okay, he should be very old already. At the point in time, 2011, he's also not that young, maybe around 60 plus already. If he's still like this, he might be about 70 plus, 90 plus already. Alex, you speak like really young already after all the experience. I'm still not as good as him. Okay, they have more experience now. Okay, yeah, this is the gist I'm going to tell you. Okay, basically it's like mosquito buzzing you. Okay, you're not going to die. Okay, the market is not going to die. Eventually, it will pass. Okay, all right, Ken. With that, I think thank you so much. Okay, I think this is the end of the live stream. I hope you benefited from my past two live stream, especially the last live stream. Okay, I hope it have calmed you down at least, or at least help you not to panic sell. Okay, all right. So with that, Shane say, yes, this is the market insights. It is a physical event. Shay will be present in Singapore in person. Okay. All right. With that, thank you so much. Okay. With that, I see you again next week. All right. With that, good night. Have a great trading week ahead, and good night and 晚安 and bye bye.